Good morning, traders. Steve Gans here, and welcome to the weekend update for November 24th. So, you'll notice that my chart doesn't have my drawings on it. I don't know why that is. I honestly don't know where they went. And I was going to start drawing them back in, but then I thought, you know what? It might be a good exercise to do what I call my technical drawings here as part of the weekend update. So I'm not going to go in and draw in everything, but I do want people to kind of look at the main process of what this is and how I do it. Now I'm using the free version of TradingView here, so ads pop up from time to time. I do my actual charting in my software platform. I happen to use Thinkorswim, but again, this is a good generic, I say generic, that's probably not the right term because it's a good powerful charting program. But I am in day bars for the S&P 500. I'm going to enlarge this a little bit because I'm really going to pay attention more so to the past few months. But if I wanted to, I could come in here and I could certainly draw a much larger, which I'll do first, trend line. And that is a long time, trend line where maybe what you're looking for is like 3, 4, 5 spots that might kind of generally coincide, okay? So that doesn't mean that there's not going to be some things that will pop out at certain places. And then I like to take this because I do believe that we're in more of a channel, and I am going to create a copy of this and then paste that line, and then I can move that line like this, and we can see that it largely creates a channel. Now I can also use one of these tools over here and just draw a channel. That's another way of doing that. So this gives me kind of a general big picture look at the market and what the market is doing. Then I like to come in and look a little more granularly at recent time periods. So now I can sort of zoom in on this a little bit, and then I'll come and I'll look at like these points here seem to somewhat be creating a little bit of an upward trending triangle. In other words, our markets seem to be maybe accelerating a little bit to the upside here recently. So again, I can come in and generally connect these different points in time. And again, this is kind of there's no real magic to this other than you're just trying to connect points that other people might also connect, because at the end of the day, this is all a big psychology game. When people see pullbacks to certain points of support, certain points of resistance, etc., that's what tends to turn the market at different times. Now, there is a way that I can change this color. I don't remember exact. Here we go. Yep. So I'll make that one red. And then I will also put in a couple horizontal lines here at various points, which this is a perfect example here. We can see here, and if I hold down the shift key, this goes to a flat line. We can see that this had been, get back my shift key here, this had been prior resistance here, blew through, then it became support, came back to support, came back to support. Now I can make this line a different color. A lot of times I tend to do these more in like a yellow. Just for me, that kind of means, or even a greenish hue, that kind of means a go line, if you will. In other words, if we pull back to this point, that may be a point that we're going to reverse and head higher again. Then I can also make a copy of this one, and we get kind of the same effect here. So this had been resistance, we came back up to it, resistance, then we pop through it. Now that resistance line becomes support. And then, of course, our ultimate resistance line right now is the all-time high, which is, let me figure out which one I'm moving here. Here we go. Which is this up here is our prior all-time high. Now, the combination of this uptrending red line and this all-time high is creating what's called a wedge pattern. And we had a wedge pattern here if we took the red line and then we took this line. And when we pop out of a wedge, sometimes we get a little bit of a run. And when we get up to the top of this again, What I'm suspecting is we might get a little bit of a pullback, maybe to this red line, and then we'll come back up here to the yellow line or the greenish line. And then my expectation right now is that we may pop through this again. In many years, you get what's called the Santa Claus rally, which is a rally that occurs between Thanksgiving and the New Year. And it's not uncommon for that to occur more often than not. With AI now, you can go out and you can ask questions like that. I didn't happen to do this one here because I kind of know those answers. I know that it tends to be a thing. The only thing that might put that in question is we've already had a pretty massive run here over the past few months. So does that mean there's still enough left in here for a Santa Claus rally? Not 100% certain on that one. But again, my expectations are to be somewhat bullish in nature still, guarded bullish. But if we come down and we break this red uptrending line, and or if we break this yellow line to the downside, then, I think we could be looking at a pullback here to this 5,700 range. But my expectation right now is 65%. We're not going to break at least this yellow line. Maybe we'll go in a channel here sideways, but more often than not, I'm leaning toward being up in this area, possibly all new highs within a couple of weeks. So that's the S&P, and we can see that our volume, our up volume, is holding up pretty well here. We're getting pretty nice volume still on these up days. Now let's take a look at volatility index, the VIX. Another thing we see here that leads toward a kind of a bullish reading is that while VIX was elevated when we had a slight pullback here a couple days ago, VIX is back down now almost to all-time recent lows. So when there's not volatility in the markets, volatility is a sign of fear in the markets. People are buying insurance, buying protection against their long-term portfolios. When they do that, this volatility index increases. The fact that it has pulled back here is basically telling us there's not a lot of fear in the market. There's not a lot of people buying insurance on their portfolios right now. Therefore, the general fear in the market right now is pretty low, which more often than not tends to be a bullish sign as well. And then we can take a look. I also like to look at the Russell index, the Russell 2000, and we can see that it also is approaching all new, I say all new highs. That's not quite true. If we really zoom out here, we can see our Russell was all-time highs back in 2021 here. So that's when it really peaked. But we're starting to push on those peaks right now. Now, another thing you may notice here, this is a very large, what's called cup pattern, where you have a dip, chop sideways for a long time, climbing back up. Many times you'll end up with what's called a handle now, where we might chop sideways in a range here for maybe a couple weeks or so. And then a cup and handle pattern is a bullish pattern. So you could pop out of the top of this pattern and get another big run in. So right now, that's kind of what I'm expecting here in the Russell small caps, is that we're going to chop sideways here, possibly between this 2450 and maybe 2400, maybe even down to 2300 range. So a little bit of a sideways chop for a period of time, and then an upside breakout is what I would tend to look at right now in the Russell. Again, this is all barring any, unusual or unexpected news that might come out that might spook the markets. So that's kind of my summary on the weekend update from a standpoint of what I would think of the markets going forward at this time. So thanks for joining in for that part, everyone. Take care. Now, those of you that are part of my alert service, let's get into the trades that we closed out this week. And we had one trade, let me just pull that down here, that was closed out. So this was a call diagonal spread, and pretty good trade, $550 in a 2-week time frame. So nice return, 11% return. This trade never really got stressed anywhere along the way. One thing I do want to point out, though, to traders that were in the alert service, a little bit learning point, if you will. Those of you, if you remember this trade, actually, let me see if I can open this trade up and we can take a look at it. Okay, I've got this trade open now, and I've got it specifically set on November 15th. So you'll see that on November 15th, this trade was taking some pressure to the downside. This trade was down about $250 at this point. Now, this is a really critical point that I want traders to understand. If I were trading this trade in what I will call a rule-based system, almost any rule-based system would have had me automatically adjusting this for more downside. So there was a few different adjustments that could have been done. I could have added a put calendar down below here. I could have rolled one of these legs up. I could have rolled one of these legs down. So there's a lot of different things that could have been done to rebalance this trade. Now, those of you that are in the alert service, though, know that I put out a brief video on November 15th where I said I am not going to make an adjustment to this trade, even though if I were trading by a rule set, those rule sets would almost certainly have me making an adjustment here. So why did I come out and say I'm not going to adjust here? Well, let's take a look at November 15th. So November 15th is right here. We had pulled back, and we pulled back to what I considered a support area. My expectation was that we would likely bounce off of this area a little bit. And sure enough, while we chopped sideways for a day or two, we then did bounce off of this area. Bouncing off of that area, if we march forward a day or two, that tends to put this trade in really nice position to where ultimately this trade was thinned out a little bit and then closed out for the $550 in profit. So again, the key point here being that rules-based trading has some value to it if you don't understand technical analysis. But the ideal situation is that a person can learn to apply technical analysis with the skills of adjustments in a trade. So rather than just blindly following an adjustment that says when delta gets above this, I'm going to do this, be aware of your surroundings. Take a look at what the market looks like before you go and just blindly make that adjustment. So I thought that was a really good take home on this particular trade, and I wanted to, again, just kind of share a little more thought on that. Now, let's look at the other trades that are open at this point. So this particular trade, as you recall, I put this trade on very, very small. It has a maximum risk of about $150 or so. And this was just a what I'll call a lottery shot that if the market were to pull back, I would expect it to pull back into this 57.50 range. And I'm just going to leave this butterfly set there until expiration next Friday. And if we get a pullback, great. If not, this thing's just going to go out at a very small loss. And again, it was a little bit of a lottery ticket to see what happened there. This trade, I think we should chop sideways most of this week. It's likely to be a light week. Many traders are off because of the holiday week. And sometime, probably maybe later this week, I'd look to possibly thin this out again. We reduced the risk in this trade significantly this last week. It did have up to $5,000 in risk to it. Then I tightened it up once. Then I tightened it up a second time. And again, those of you that are part of the alert service, and I'll put information on the alert service in the link down below as well. So those of you that aren't in it and want to know more about it can take a look at that. Basically, it's a way for you to follow along every trade when I open it, when I adjust it, when I close it. And in each case, I'm providing a video that shows maybe a little 5-minute, 10-minute explanation of exactly what I'm doing and why I'm doing it so that people can learn along the way. So you'll see exactly why and how I adjusted this as I moved along. Same thing here. This head had more risk to the downside in it, but I tightened up that risk in this trade as well by rolling in my wings. Then I launched this new SQ trade last week, and this is designed to be a long-term buy and hold, a leap. I bought a call option. I spent about $2,500 on this call option, and it's already up $700. Now, there's a perfectly good case for saying, gee, I want to close this thing out. But those of you that are part of the service know that wasn't my game plan. My game plan is I bought this 2 years out in time, and I think this has the potential of being a very significant winner over time. If we take a look at SQ here, and again, the video showed all the details on this. I went into all the fundamentals, etc. in SQ. But here's what I'm looking at. I'm looking at the fact that SQ has based for a very long time, and it's starting to break out over here. If we take a look, it's starting to push. It broke out above these old highs, and I think it could break out further. If that breaks out, I would expect it to run up here into the 139 range. At that point, I have a plan for it. I'm going to start selling some covered calls against it until it potentially breaks through this zone as well. And then at that point, I will let it run again up until 225 here. And again, this is a long-term trade. This I expect to play out over a year or two maybe. But I showed in the alert service how I found this, why I selected this, why I was willing to risk $2,500 on this, because this could, if my theory pans out, I mean, this could be a $10,000 or more winner. I had a similar trade like this on Avgo that I did over a year ago. I've posted those in my YouTube channel. That Avgo trade is up $120-some thousand and still going at this point. So that's SQ. And then just kind of the opposite play here, but FTNT was a bullish symbol very similar to what I just showed you in SQ. And I chose to sell puts to potentially get into FTNT using what's called the wheel strategy, which I go into in great detail in the service. And that wheel strategy, while I haven't taken possession of FTNT stock yet, I have sold puts, and I've rolled those puts out now. I believe this has been the 6th rollout. And then once this put deteriorates, loses its value, adds more profit in here, I'll be up about $2,600 in this trade, and I'll roll that put yet again. So I've been rolling those puts, those short puts, monthly, just taking in premium as I roll them, awaiting to get assigned on FTNT at some point. And I've just lowered my cost basis on this, my eventual purchase, so that when I do finally get assigned, this is sold at 75. If I were to get assigned at 74 or 75, my actual cost basis is only 65 or less because of the number of times that I have sold these puts and brought in premium every step of the way. Again, that may not make total sense to everyone right here, right now, but as part of the service, we get into the wheel strategy, we talk about that, and there's even a little spreadsheet I shared with people where you can go and kind of do some calculations on your own. So that is it right now for the alert service. Things have been going along well. It's going to be a quiet week next week, so I really don't anticipate opening a new trade unless some great opportunity opens up. I will be looking for some opportunities, but more often than not, I'm thinking that I might be able to thin a couple of these out a little bit, maybe reducing my risk further, but keeping my profit window in view, if you will, or in play. So that's, if I do anything, I'm probably going to lean a little more that direction. And then volume will start picking up again next week after Thanksgiving. So that's it for now, everyone. Take care.